Hello and welcome to the Solutions Scoop. I'm Ravi Venkatraman.
And I'm Amanda Tepper. Ravi and I are co-founders of the Chestnut Solutions Institute, an independent forum dedicated to advancing the future of the investment solutions industry. Here at The Scoop, we examine the latest solutions marketplace developments and speak directly with solutions industry leaders. Our guests span the investment ecosystem, from OCIOs to asset owners, investment consultants, asset managers, and other key industry stakeholders.
These conversations are an important part of the Institute's mission to improve transparency and help establish standards and best practices across the solutions industry by educating asset owners, providers, and all other industry stakeholders. Let's get to today's scoop.
Good afternoon, everyone. My name is Katie Walmsley, President at PMAC. I'm delighted to welcome you to our Institutional Client Services Network. It's been a few months since we've had a meeting, and we're really delighted to have so many attending today and to have a guest speaker with us. We're delighted to have back to the Institutional Network Mimi Magender, who is the Principal of Client Relations and Business Development with Foyston Gordon & Payne. So Mimi, I will turn it over to you to get our session going and introduce our guest speaker.
Thank you so much, Katie. And thank you to you and Amir for inviting me to guest host today. And good to be back into this network. So welcome everyone to the first Canadian Institutional Client Service Network meeting of 2025. We have a great presentation for you today. I'd like to introduce our guest speaker for today's meeting, Amanda Tepper. Amanda is the managing partner at Chestnut Advisory Group, who co-leads Chestnut's strategic advisory practice, partnering with asset managers and OCIOs across a diverse mix of asset classes and firm sizes to devise and implement successful growth strategies. Amanda's custom market research expertise often shapes her advisory work. Her early research into the OCIO marketplace on behalf of those advisory clients led directly to Amanda serving as co-founder of the Chestnut Solutions Institute, where she leads the Institute's research efforts. Prior to founding Chestnut, Amanda served as a global director of AllianceBernstein's senior portfolio management team, a group that crafted and delivered the firm's investment insights to both institutional and retail clients and consultants. Amanda, I'll turn the floor over to you.
Thanks, Mimi and Katie and Amir and everyone at PMAC for inviting me back to speak today on a topic that we talk about a lot, which is custom solutions and why they're growing so much in the marketplace. So I want to start where we always do. So the official title is Custom Solutions Focused Approach for Institutional Clients, because I know you're an institutional group. So we always want to start at Chestnut. We always think about the client first. And we have this concept that we call the golden circle, and we help our clients, who are all investment managers, answer key questions to put themselves in the golden circle. And think of this as a bullseye, where with three circles, the outer one is the what, the middle one is the how, and the center is the why. The why gets you hired. However, we find that most managers spend the vast majority of their time talking about their what and their how. So we've reframed this a little bit. And really, I'm talking about this because this is going to get us into the discussion of why are investors moving to solutions so much and away from traditional single products. So the ultimate why for an investor is, why should they hire you? And the ultimate why for an asset manager really comes down to, why does my firm exist? So these are kind of existential questions to kick us off, and just kind of frames the reason that investors are looking for holistic solutions more and more and moving away from the traditional, what we call building blocks approaches, because they have a lot of whys that the traditional building blocks approach doesn't satisfy as well. Before we talk any more about why it's growing, let's talk about what is an investment solution. So a big part of why we founded the Chestnut Solutions Institute about 2 years ago now, is because we found that even though we were doing an increasing amount of consulting and answering more and more questions around OCIO and all sorts of different types of what we would think of as investment solutions, we were finding that there were no standards in the marketplace. There was not even a standard around what is an OCIO or what is an investment solution. So this is the Institute's definition of an investment solution. And you can see that there's of course, a spectrum. We draw a firm line after what we call investment portfolio building blocks. That's the traditional approach with individual single asset class products that are standardized against a common portfolio. That, of course, is the world that most of us have spent most of our careers in, but that's not a solution. If it's the classic would be a large cap equities portfolio indexed against, if it's global, indexed against a global index, that's the same product no matter who buys it, and different clients can use it for different ways, different purposes. So you become a solution as you get away from being so standardized. So the first step toward being what we would consider an investment solution is when that standardized product starts to be customized in any way. So one example that I used to see all the time when I was at an asset manager that had a lot of equity products was doing some type of ESG overlay that was custom just for that particular client, like, for instance, nuns. Catholic nuns, right? So they would have certain things that they thought were sins that they didn't want in, and we did it just for them. Even customized reporting becomes standardized, customized risk management analytics. They want a little more vol because they want a little more return. That would be what we call a first step solution. The second step solution is literally taking it one step further. So any multi-asset class product would be a second step solution. Target date funds are a classic example because while, yes, there are a lot of people in any one target date fund, it's just the entire portfolio is optimized toward a particular retirement date that only applies to the cohort of people who are in that fund. So that's a solution for that subset. And then the third step, or the full implementation of a investment solution, would be a full portfolio OCIO. We can talk, if you want to, about with or without discretion. We think that's an artificial construct. But if you're taking over the entire portfolio and making all of the allocation decisions, that would be a third step investment solution. So overall, it's any product or service where the goal is to meet the specific needs of a unique investor, which is, of course, the why in our golden circle. So it's the value proposition of solutions, and why is it that they're gaining so much share with investors? So there's a macro backdrop to all of this, which is the investment marketplace is much more complex than it used to be. So the marketplace in which the traditional building blocks approach grew up was really two asset classes, maybe three: cash, fixed income, and equities. So today we measure 15, 18 formal asset classes, probably more if you add sub-asset classes. So that's a really confusing dynamic for investors to navigate, particularly with governance that was created for a simpler marketplace. So the quarterly meeting of a investment committee was certainly sufficient when you were trying to figure out how to tweak the allocation between two asset classes. But the typical institutional portfolio today of over 100 asset managers across perhaps 16 asset classes, plus with a very volatile marketplace on top of it, doesn't feel sufficient increasingly to many investors. So there's 4 key pieces to the value proposition that solutions bring. One is this investment expertise and access to a greater array of asset classes, more timely and nimble decision making, even if you're in a forget the whole portfolio, but if you're just allocating a sleeve to OCIO, or if you're buying a few multi-asset class products that are designed to tactically allocate to different asset classes, you're getting away from your own institution's quarterly meeting cadence and levering the expertise of dedicated experts. There's a governance piece. You don't hand away the governance. So there's been a lot of chatter in the marketplace about that. To be clear, no matter who you're hiring, the governance always sits with the asset owner. But again, when you're navigating all these different issues, all these different asset classes, part of what many investors want, and we'll get into this more in a bit, is advice on how they should be approaching their governance and what policies they should have and how they should monitor them. So, and in addition, a lot of providers bring enhanced protocols, and they even have systems that help manage and monitor the portfolio relative to policy. So there's a reporting chain that didn't exist before. Then there's the operational piece, which is enormous and growing. And you all, I'm sure, know about that with your clients, increasing regulatory requirements. And solutions providers can bring a lot of value-added services through their scale, not just lower fees, but they can also give the investor provider to trading platforms, high-end reporting technology, and new products and vehicles that they might not be able to get otherwise. And last but not least is a real enhancement of investor understanding, which is the underpinning of investor trust. So solutions providers will address a lot of other investor concerns beyond risk return. So there's custom multidimensional axes that are used, and we'll talk about those too, to build and evaluate how the client's most important needs are being addressed. And also continual client education is provided by these solutions providers, which is broader than filling you in on the most exciting development in the top 5 holdings of the small cap product, and they're kind of broader across the portfolio. We have a little poll, and that'll lead into the rest of our discussion. So the first question is, what type of investment products and services does your firm offer investors? We've got single asset class and multi-asset class, OCIO and other investment products, OCIO and consulting only with no in-house investment products, investment consulting only, or other. And then the second question is, what are your primary go-to-market messages when you're speaking with prospective clients today? Okay, great. So most of the audience offer both single asset class and multi-asset class products. Looks like there's no investment consultants. And so that's helpful. And then in terms of what the primary go-to-market message is, number one is helping the client achieve specific long-term goals. So that's good because that is, of course, where clients' heads are around the world increasingly. Number two is the product role in the portfolio. Performance is third, and expertise came in last. So the results from this and most of the other slides you're going to see come from proprietary research that we've conducted in the marketplace. So this is of the asset managers that we polled recently. 3/4 of them offer at least some investment solutions products and services to their clients. So it was about half of you all who said, but in the marketplace, it's 3/4. And furthermore, more than 3/4 of all of their clients, so that would be both institutional and retail, are using at least one in-house solutions product at about 1/3 of the asset managers. So in our poll. So no matter how you want to look at it, it's growing. And there's a lot of product development coming behind that. There are a lot of solutions beyond multi-asset products, however. Customized versions of single asset class investment products all the way down to trading capabilities, access to manager research, and other things like custody. We didn't even ask at the time about custom consulting projects, custom reporting, which will be in our next poll, and because we know a lot of asset managers are offering those, often at no fee. So how do you get a return on doing all of that? Sometimes it's the most straightforward is to get revenues from the solutions business. So if you have a multi-asset class and you're just selling a lot of it, that's how you get the ROI. But for a lot of asset managers, they're finding that they get additional mandates from clients. Once a client is using their solution services, it's a closer relationship. And so they feel they're getting more mandates than they would have otherwise. And also clients are just more satisfied. So the satisfaction scores go up, and that in and of itself can be used, as you know, as a marketing tool, just sharing that score. So getting into a solutions business overall is something that we talk about with our clients in our Chestnut Solutions Institute members every day. And what we found is even for what you would think of from the outside as objectively some of the most successful investment solutions providers in the world, nobody has this figured out yet because it's so new and it's growing so fast. And every asset manager is finding they're really organized for the old world, not the world that they're actually operating in today. And there are a lot of different reasons to even have an investment solutions business. A profit center would be an obvious one, but there are some OCIO providers, certainly, that are boutiques just looking to deliver top performance for the whole portfolio, just like there are boutique alternative and traditional asset managers. Many are increasingly getting into it as a business diversifier to kind of support what they view as their core businesses. And that brings its own challenges, that approach. Some view it as distribution. There's a lot of M&A going on, which we can talk about if you like. So there's a lot of reasons to do it. And then the issue always becomes, how do you organize it, and who's calling the shots, who's building the portfolios, and who's interacting primarily with the clients. So you can see here the sample structure, which almost nobody really has, but this would be an ideal, perhaps, approach, would be the solutions businesses on top. There's investments on one side and client advisory on the other. Under investments, you have all the different product sets. And under client advisory, you've got the sales piece, the distribution piece, but also many value-add advisory capabilities. In practice, what we find is there's often a lot of internal conflict, a lot of internal stepping on each other, but all the elements need to work together, because successfully delivering an investment solution to a client needs a lot of hands on deck. It's much more, the more customized the solution is and the larger the portion of the portfolio that you're providing as an asset manager, the more parts of your organization will need to be involved in coordinating in delivering it successfully to the client. So that's all I've got on solutions broadly. Now let's turn to OCIO specifically. So what is OCIO? We have an article out on this because that's another definition that OCIO is driven by all the other investor needs we just talked about. So this chart, there's a lot going on here. The bars on the left are institutional mandates only. So, and we know from talking to many of the OCIOs who provide their data that from one provider to another, it is not at all comparable. There are apples, oranges, and pears in here. But the trend is that it's growing rapidly. you can see from 2016 to 2024, it's more than doubled, almost tripled. But then there's a line and there's a huge jump for 2024 because that's the difference between the apples, oranges, and pears that are kind of in the marketplace and Chestnut's definition of what is an OCIO. So we are including everything that would be whole portfolio management. And we've got this detailed in our recent article on this, but we put the global OCIO marketplace today at 4.7 trillion, but it's bigger. We know it's bigger than that. We know there are other asset managers whose names we didn't include. And we know that some of the numbers are underneath, but it's big. And then we have it growing at just under 9% over the next 5 years, which we think is pretty conservative. And it's a mix of organic growth and conservative market estimates. On the right are the top 25 global OCIO firms from our list. And the full list that we have, I think it was over 130 firms and doesn't even include many all Canadian firms that we know of, much less regional firms in Europe and regional firms in Asia. So it's a big market and it's growing across the board. On the next slide, let's talk a little bit more. So why are investors moving to OCIO? It's that increasing market complexity that we were talking about, but this is from another poll specifically asking, what are you looking for? Number one was risk management. They want to streamline processes. They want to have a better experience. It's many of these allocators, we've all seen them saying they want less and less providers, but this really streamlines it because they don't need to meet with the providers. They get a better client experience. It frees them up. They talk about improving internal employee productivity. And really that means they can get back to focusing on the bigger picture of their own needs, their own cash flows, and get out of the weeds where they're less comfortable. You can also see that sleeve mandates are shrinking and whole portfolio mandates are growing. Many investors get into OCIO. They often will start with just one or two asset classes, or they might do all their alternatives. And then as they get comfortable, the trend has been to move to full portfolio. In terms of the types of clients that are served, which is on the next slide, and this is again from our research, the fastest growing market segment is endowments and foundations. That is not a group that is fully penetrated, even though they were among the first movers. But corporate DB, private wealth, insurance, RIAs on the wealth side, defined contribution, and government defined benefit, all of them are growing. So overall, we see organic growth still in the low double digits kind of overall. It's higher in some segments than other, and it's across all sizes of clients too. So you might have seen in the news some very, very large plans that moved to outsourcing over the last year, but there are also a huge amount of small plans and everything in between. So, and there's different providers that focus on different segments, and some providers do all the segments. So for asset managers now who are looking at this marketplace as you all are with our session today, there are challenges that you face. So how do you partner with an OCIO or a solutions provider? Because you have some terrific products. So this is again from our poll, differentiation was the biggest single issue. Of course, for OCIOs that have consultants, it's getting a buy rating, but it's really the same process if it's an asset manager-led OCIO. They all have manager research teams that have the equivalent of a buy rating. But number three is a mix of issues, one of which is even understanding what do OCIOs and solutions providers want from asset managers. The traditional consultant relations approach, which I would summarize as get all your products rated and that get all of them rated as highly as possible, is just the first step for partnering with an OCIO. What OCIOs want from asset managers they put on their portfolio, on their platform, is a different stream of education that they will use and insight that they can use in their markets. And they really want a heads up if you're seeing something coming in the markets, because they also care a lot about reporting technology. More than one OCIO has told me they can only report as promptly as the slowest manager on their platform. So, and then there's issues of, well, how do you get to the decision makers at OCIOs? Some OCIOs have it centralized. Most of them don't. Many OCIOs go to market by client segment. So it's just a different coverage and messaging issue for asset managers. And then do not discount the issue of not just fees, but customizing your vehicles. So there's a big technology piece, and OCIOs will care a lot about the vehicles and your ability to work with whatever vehicles they're using for their different types of clients. How do OCIOs themselves get hired? And this is a whole area that is changing as well. Let's just say that it's all over the map. When OCIO was starting, really taking off 10, 15 years ago, it would be the board getting together and deciding they think they want to do this. And they would ask each other, who do they know? And that does OCIO, and they'd invite a couple friends and then they'd hire somebody. That moved to be disintermediated, where today we estimate about half of all OCIO searches involve a third party. They're known as OCIO search consultants. They're trying to standardize the process and help the board kind of think it through. There's some benefits there. There's a lot of issues there. But in this chart, what we're looking at is this is all OCIO respondents. So what do they think are the top 2 hiring factors, and what are the actual hiring factors? And this won't surprise you. The actual top 2 hiring factors are that the client already knows. And number 2, which makes a lot of sense, and this helps explain to all of you why OCIOs are organizing themselves by client segment. The number 2 factor is feeling that OCIO really knows that client segment well. In other words, hospitals or corporate DB plans. So everything else is kind of an afterthought, and investment performance is, I would just assert, it's not the driver of why firms go to OCIO, nor is it the driver of why they choose a particular OCIO. And that leads to a whole can of worms about evaluating OCIOs once they're hired, or evaluating solutions providers in general, which we'll get to in a minute. So across North America today, there are what we would say are 6 different types of OCIO providers. So this is Chestnut's framework. And the largest 2 are by AUM, are what we call generalists. They're primarily investment consultants, former traditional investment consulting firms that now offer OCIO services, and then asset managers, so that now offer OCIO services. And some of these asset managers may have open platforms. Some of them have closed. Some of them have in between. But between those 2 providers, that's 80% of the marketplace today. By firm type, however, you can see that the largest single group are these specialists. So these are often former investment offices that spun out and are offering their services to like clients. Most of them focus primarily in the nonprofit space and also family offices. And most of them offer a best ideas portfolio. and their share has been shrinking. That's a tough space to be in, because what's really driving the outsourcing is not that they're not getting the drive to hire OCIO, is not that the feeling that they're not getting the best ideas. It's that they want exactly what they want, and they want a provider who can give them exactly what they want. And that's tough for some of these specialists to do. In terms of the range of services that OCIOs in particular offer, of course, it starts with asset allocation and strategy advice, but there's a long list underneath and many more that we didn't even include in the last survey. But custom portfolio construction, mandate guidelines, operations, governance advisory is a big one, risk management analytics, and custody, not to be discounted. So that just gives you a sense of the range of things. And when hiring an OCIO and evaluating an OCIO, all of these elements need to be taken into account. So this is Chestnut's rubric, and we're about to publish a major research piece on this. We're on holistic value measurement of solutions providers. So the way the traditional approach of evaluating investment managers is really focused around performance and fees. And most of the databases in our industry are oriented this way, and most of the evaluation approaches are oriented this way. GIPS went a long way toward making this doable. And it's not just absolute performance, but are you performing in the guidelines you said you would? Are you truly a value or growth investor as you say you are? How many securities are you owning? All of that level of detail. So it's understandable that the first step toward evaluating OCIOs is taking that approach. So we just saw within the last month the first set of GIPS reporting standards being proposed for OCIOs. There are, over the last year or so, the first set of OCIO benchmarks out there that are inviting OCIOs to report and that investors can look at. The problem with all of this is that that's not what investors are looking for. And so you're trying to compare truly customized portfolios that are being built to address many issues that come often before performance. So this rubric starts, of course, with investment capabilities at the core. And within investment capabilities, we include things like values alignment, which matters increasingly to more and more investors. But then we get to the operating capabilities that really need to be evaluated around the custom reporting, the data and technology, the vehicles. Transition management is very important with OCIOs. So when you're taking over the entire portfolio, often a big chunk of it is illiquid, and how that's managed is a big piece. So all of these things need to be evaluated and tracked on an ongoing basis. And then there's all of these value add services. So staff and board education, governance education and evaluation. There's often business support. So for instance, in the nonprofit space, many nonprofits actually rely on their OCIOs for fundraising support and advice, thought leadership, and research, custom research. So that's why we are working on this holistic value measurement, and we're actually going to be introducing a tool that allocators, asset owners can use to improve governance, to bring a more systematic approach to evaluating their providers. And we really want to encourage asset owners to lengthen their time horizons. Part of the issue by being so performance focused, as all of you know, is any performance evaluation is going to be very highly impacted by whatever happened last quarter. When you're talking about turning over your entire portfolio, that is something that should be ideally an OCIO mandate ought to be at least 5-7 years. So you want to manage it accordingly. And on the provider side, this is a very important part of the effort to get the client to move beyond focusing on performance and fees, which, as we've discussed, is not what's driving this growth to begin with, and encourage a partnership approach. So that's the end of my formal remarks, and I'm happy to discuss anything and everything.
Thank you so much, Amanda. That was actually very helpful and useful for that overview. We did have one question for the group.
So this is, how does your firm engage with OCIO providers today? The choices are: you have a dedicated OCIO relations team, you use your consultant relations team, you're not really focused on OCIOs as a channel today, or it's ad hoc and you're calling on OCIOs as you can.
We can see the results now, Amanda.
Got it. So it's mostly ad hoc, which makes sense because it's new and it's growing. I will say about 5 years ago, we started seeing the dedicated OCIO relations team approach being taken up by a few managers in the marketplace, and that has grown substantially. So I would just encourage all of you to think about moving to that model to the extent you have the capacity, because it's a really different type of relationship building approach, and they have different needs and they're very demanding than any other channel.
Well, thank you for those comments. We now have a little bit of time for an open floor discussion. So I'll invite the group. You can send questions through. We have the chat. You're welcome to put it right into the comments of the chat. Alternatively, you can unmute yourself and we have an open floor. We can ask the questions. Why don't I actually kick off? I do have a question for you, Amanda. So from my own perspective, let me ask the question around what response is there when in a true OCIO arrangement, it is full portfolio, it's the full plan. How do you address concentration risk in the sense that you've now, again, assigned all of your assets to one manager, if you will, and that type of oversight? How is that addressed?
Well, the short answer would be that's exactly what we're trying to address with the holistic value measurement tool, that it's something that should be every element of this multifaceted relationship should be examined quarterly and certainly annually. So that's kind of the ultimate key man risk. And that would get to the hiring and evaluating decision of the manager, of the client and their governance structure. Though I will say there are using the traditional portfolio logic, portfolio risk, saying, oh, let's hire 2 OCIOs. We're a $10 billion plan. Let's go get 2 OCIOs and do 5 and 5. Everyone I've ever talked to who's been involved in those says it's a nightmare on many, many, many levels and do not recommend. So it's kind of counterproductive to what you're trying to get out of an OCIO relationship. So the other thing I would say that probably most OCIOs would say is even those that have quote unquote closed architecture, they're all using lots and lots and lots of other managers. They're all using many other providers in terms of, even if they're offering custody, there's other service providers along the chain. So ultimately the fiduciary responsibility is still where it always was.
And I think you touched on it, the key person risk and being able to actually even look at the business's idiosyncratic risk. How much of that of an onus does that put on an OCIO client to do that due diligence when making their selection? Are there ways to mitigate that?
Every single element on that 3-level wheel that I talked about. And different elements are going to be more or less important to different clients.
Okay.
Depending on what it is that they're looking for. But they would want to look at all of those things.
Okay. That's helpful. Thank you.
Amanda, hi. Maybe just a question. Do you see more turnover on OCIOs compared to other, investment management approaches? Like, is there different areas of dissatisfaction that creates turnover in the OCIO space, would you say?
Yeah. So there's sort of two questions in there, and they're both really good questions. So I haven't looked at turnover of managers, of single class managers in a while, but my gut would be that OCIO turnover is lower. It certainly should be lower. There are huge breakage costs involved. So it's a big trigger to pull to even go to the first one and to do any kind of turnover. So I would think it's lower. What are the drivers of turnover? The single largest driver actually is on the DB side, and it's that they fully defunded and don't need the OCIO anymore. So it's like, congratulations, you did your job. Now you're fired. Yeah. After that, it is usually some mismatch of what they thought they were going to get and what they actually got. And that can come under a whole host of things. Sometimes they may call it performance, but when you peel the onion, it's virtually always some other element of what they were looking for. Often it was that OCIO 1.0 kind of decision. And then they realize, wow, it's a big world out there. We want to be more thoughtful about what we want to get this time.
Okay, that's helpful. Thank you.
Amanda, I'll ask another question around, you mentioned it in your presentation around manager access. Now, let's, for the sake of argument, something that happens, let's say this weekend, for example, in the industry, in the market, how will clients be able to access the thought leadership? What is the responsiveness that one can expect?
Another great question, Mimi. So I would say there's manager access and there's manager access. When I was talking about manager access, I meant tough to get into specialized, often alts managers like VC and private equity that smaller and mid-sized allocators could not otherwise get to, that they're able to get to through their OCIO. That's often part of the offer and the value proposition, or even specialized co-investments on one-offs and customized investments and things. In terms of actually talking directly to the managers, the OCIOs curate that. So I will say the fastest way for an asset manager to get themselves kicked off of an OCIO platform is to try to go around the OCIO and go directly to the client. That's a big part of what the client expects the OCIO to curate for them. They will pull in who is most relevant and who makes sense at the time. I'll say, for instance, when COVID first hit, a lot of OCIOs were pulling in different asset managers. They wanted their healthcare analysts on the line with all their OCIO clients. So that's the kind of thing you want to be ready to provide. And if you're on the platform, probably calling them and proactively offering that's the kind of partnership they would want.
So that proactive is appreciated, and that, again, would drive.
Yes, because asset managers are always going to be closer to what's actually happening in the marketplace than someone at the, an investment consultant, someone at the whole portfolio level. So yeah, they appreciate those heads up, even if they don't use you.
Wonderful. Thank you. Well, seeing no other questions, first of all, I'll say thank you so much, Amanda. That was a very insightful and helpful presentation in terms of the overview and giving us some frameworks with which to think about the OCIO relationships. So thank you again to Amanda. Thank you, Katie and Amir, for organizing. If nothing else, Katie, I will adjourn our meeting today, and I wish everyone a good rest of your week.
This podcast is owned and produced by the Chestnut Solutions Institute. If you like this content and would like to access more insights, webinars, and podcasts, please check out our website, chestnutadvisory.com.